Hi girls, in today's video, let's learn about building wealth for a purposeful and an enriched life. What is wealth? Let's conduct a thought experiment. Imagine being shipwrecked on a deserted island with $100 million. In that moment, money means nothing. Only food and drinkable water matter. That is true wealth. So the goal isn't to accumulate vast riches, but to earn enough to buy freedom, create security, and live a life of purpose and meaning. Let's learn about three strategies by three famous investors for building wealth. The first is One Fund Strategy by J.L. Collins. J.L. Collins is the author of a book called A Simple Path to Wealth. I highly recommend reading that book. He recommends 100% allocation to total US stock market index fund or an S&P 500 index fund. The average return from 1995 to 2025 is about 10.28%. $10,000 invested in 1995 would be $224,000 in 2025. The next one is called the Two Fund Strategy by Warren Buffett. Warren Buffett is a very famous investor, and I highly recommend learning about his investing journey. He recommends 90% in total US stock index fund or S&P 500 index fund, 10% in total US bond index fund. The average return for this strategy from 1995 to 2025 is about 9.82%. $10,000 invested in 1995 would be $180,000 in 2025. Finally, the three fund strategy by Jack Bogle. I highly recommend learning about Jack Bogle. He's a famous investor who created a company called Vanguard that I use personally and highly recommend it. He recommends 70% in total US stock index fund or S&P 500 index fund, 20% in total international index fund, and 10% in total US bond index fund. The average return from 1995 to 2025 is about 8.87%. $10,000 invested in 1995 would be $138,000 in 2025. Do note that I use the word index when I address the funds. So an indexed mutual fund simply tracks market index. For example, the S&P 500 index. You don't need a fund manager to track the S&P 500 index fund. My recommendation: over the last 3 decades, the US total stock market index fund and the S&P 500 index fund have outperformed nearly 90% of the active fund managers. Based on that, I recommend the following options. Option 1, to go with One Fund Strategy by J.L. Collins. Invest 100% either in the total US stock index fund or S&P 500 index fund and relax. This is simple, low cost, and highly effective. Option 2, if you feel adventurous, allocate 90% to total US stock index fund or S&P 500 index fund for long-term stability and growth, and use the remaining 10% for individual stocks or speculative opportunities such as crypto and precious metals. This will allow you room for calculated risk without compromising your core portfolio. In conclusion, over the last 3 decades of my earning, investment, and life journey, I made mistakes, learned hard lessons, and done extensive research, so you don't have to. First of all, avoid debt. If you use a credit card for rewards or building your credit history, treat them like cash and pay the full balance every single month. Strive for simplicity. Invest in the total US stock index fund or S&P 500 index fund and chill. Ignore the fear-mongering media unless you're genuinely interested in the economy and the markets. Track your net worth once or twice a year. Use your time for what truly matters. Invent something, cure a disease, build rockets, build meaningful relationships, and most importantly, enjoy your life. And as always, we'll wrap it up with a dad joke. Who won the neck decoration contest? I don't know. It was a tie. I love you, girls. See you in the next video.